Hello everyone and welcome back. Forex market watch list. That's what we have on the menu today. And we're looking at the Aussie versus the US dollar, Australian dollar versus the US dollar. And even though I already pulled the trigger here, guys, I still consider this as a pending trading opportunity. And it's still on our watch list. Reason B, price action did make it below 62.86 yesterday. So officially it had been triggered. Nevertheless, we need 2 days in a row for price action. We need a second day basically to stay below 62.86 for this to be official, right? So I kind of jumped the gun a little bit, but that's something I usually do. In fact, we started off early as price action got rejection from 63.80. The official trigger level was and still is 62.86, but I felt comfortable enough to pull the trigger as price action was turning off 63.80. Let's take a look at that from the weekly perspective. I think it's, speaks volume. I mean, you can see ever since early January, price action had started to stabilize, right? It was coming off of a pretty strong downside trend. I would say very strong. Like literally no corrections on the way, right? So a move from the top levels of 69.45 all the way to the bottom 61.35, right? That was a very sustained downside push all the way down, and roughly around early January, price action started to stabilize, which means consolidation, right? A trading range, back and forth, back and forth. Now, price action, I mean, let's dial back a little bit to late February. So price action came off of 63.80 after, unsuccessful attempt to break above, and it found tough resistance at 63.80 and started to turn around, and it was making its way towards the lower section of that range, starting with a level of 61.81, but it missed it by a tiny margin. To me, that says that it's very suspicious to me, meaning that usually price action comes back later down the road to finish the job, to solidify a touchdown with the lower section of the range, starting again with 61.81, which it missed. So I feel like the last 2-3 weeks was nothing more than a technical correction to the first downside leg. Now, also, price action made it again to the 63.80 with that nice spike there, that vicious spike, right? Touching down with 63.80 and bouncing off very aggressively, ending up negatively, but also closing the weekly bar below 62.86, and that was the trigger. So, yeah, this bearish conviction had been triggered. We fired off a couple of trades, but again, we need price action to remain below 62.86 by the end of the day to get that confidence to pursue this bearish campaign. If price action close above 62.86, we're going to give it one more day to see where it goes. If it stays above 62.86 the next day, then we're going to run for the exit, right? We're going to take some profit, probably a small profit on the first trade, and potentially a small loss on the second trade. But I feel hopeful about this, that it will remain below 62.86 and will continue to intensify this negative momentum. And if that's going to be the case, we're going to get more aggressive, fire off more trades, and increase our position size. As far as stop loss level right now, our initial stop loss level, that is at 63.85. And yeah, really looking forward to see how this is going to unfold. We'll come back to follow up and we'll keep you posted. In the meantime, guys, we're moving on to the next video. See you there.